Welcome back to Skytech-Lens. The electric vehicle revolution is transforming the way we move, and at the heart of this transformation are critical minerals that power the next generation of transportation. Among these, nickel stands out as a linchpin, quietly enabling the shift to cleaner, more sustainable mobility. Nickel is not just another metal, it's the backbone of advanced battery technology, especially in the production of high-performance lithium-ion batteries that drive electric vehicles forward. By providing exceptional energy density and thermal stability, nickel allows batteries to store more power, last longer, and deliver the range and reliability consumers expect from modern EVs. Without a steady supply of high-purity nickel, the ambitious targets for EV adoption and production would be impossible to achieve, stalling progress toward a greener future. Canada plays a pivotal role, supplying nearly half of the nickel used by the United States. This partnership ensures not only predictable costs for manufacturers, but also a secure and reliable supply chain that is less vulnerable to global disruptions. The NMC battery, named for its nickel, manganese, and cobalt composition, has become the dominant choice for larger vehicles, from SUVs to trucks, thanks to its heavy reliance on nickel for enhanced performance. Any disruption in the nickel supply chain, whether from geopolitical tensions, trade disputes, or logistical challenges, can send shockwaves through the entire EV ecosystem, affecting everything from production schedules to consumer prices. Stability in the nickel market is essential, not just for meeting production targets but for fostering innovation, investment, and long-term growth in the electric vehicle sector. The political decisions made in 2025 highlighted just how delicate this balance can be, as policy shifts and international negotiations directly impacted the flow of nickel and the pace of EV development. When nickel supply is threatened, the consequences are immediate and far-reaching. Factories slow down, prices rise, and the dream of widespread electric mobility is put at risk. In 2025, the U.S. government imposed sweeping tariffs on Canadian nickel, a critical raw material for electric vehicle batteries. This decision sent shockwaves through the North American automotive industry, which had long relied on stable, affordable nickel imports from its northern neighbor. The sudden 30% tariff dramatically increased costs for automakers, forcing them to rethink their supply chains and manufacturing strategies almost overnight. For many companies, profit margins shrank as the price of nickel soared, putting pressure on every stage of vehicle production. General Motors, one of the largest U.S. automakers, was hit especially hard. The company was forced to cut its 2026 electric vehicle production outlook, a move that sent ripples through its revenue forecasts and disappointed investors hoping for rapid EV growth. To cope with rising expenses, automakers had little choice but to pass the added costs onto consumers. As a result, electric vehicle prices climbed across the board, making them less accessible to everyday Americans and threatening the momentum of the EV revolution. The Ford F-150 Lightning, once hailed as the electric truck for the masses, saw its price tag jump significantly. This price hike put mainstream EV adoption at risk, as many potential buyers reconsidered whether they could afford to make the switch from gasoline. Industry analysts quickly sounded the alarm, predicting a downturn in demand for electric vehicles. They warned that higher prices could slow the transition to cleaner transportation, undermining both automaker profits and national climate goals. Ironically, the tariffs seemed to contradict Washington's own efforts to accelerate the shift to electric vehicles and reduce carbon emissions. Policymakers found themselves at odds with the very industry they were trying to support as the cost of going green suddenly became much steeper. Automakers now faced a series of tough choices. Should they absorb the extra costs and risk their bottom line, raise prices and risk losing customers, or scramble to find new sources of nickel, possibly from less reliable or more expensive suppliers? Each option carried its own risks and uncertainties, leaving the industry in a state of flux. The tariffs created a paradox that hurt both car makers and consumers. Frustrated buyers faced sticker shock at dealerships while automakers struggled to balance financial survival with the push for innovation and sustainability. As tensions mounted, a new showdown began on American roads and in corporate boardrooms, with car makers caught in the crossfire of policy, profit, and progress. The future of the U.S. auto industry, and its role in the global EV race, hung in the balance. Canada swiftly countered U.S. tariffs with strategic measures. A 15% export tax on nickel ended duty-free access for U.S. manufacturers. Canada launched a carbon tracking system to promote green nickel. Ottawa invested in LFP battery production. Reducing reliance on the U.S. tax incentives secured a gigafactory in Windsor, Ontario. The Buy Canadian program mandated domestic materials for exports. Canada showed a unified front ready to play hardball. In the midst of a heated global trade dispute, Canada found itself holding a unique advantage: its strong environmental reputation. While many countries scrambled to defend their industries, Canada leaned into its green credentials, using them as a strategic tool on the world stage. This wasn't just about image, it was about leveraging real, measurable progress in sustainability to gain an upper hand in international negotiations. One of Canada's standout achievements was its production of green nickel. Unlike traditional nickel, which is often associated with high emissions, Canadian nickel is produced using abundant hydroelectric power. This clean energy source dramatically reduces the carbon footprint of the metal, making it far more attractive to environmentally conscious buyers and regulators. In fact, Canadian nickel mining operations emit just 4.2 tons of CO2 per ton of nickel produced, a fraction of the emissions seen in other major nickel-producing countries. This significant difference set Canada apart, especially as the world became more focused on the environmental impact of industrial supply chains. The European Union's introduction of the Carbon Border Adjustment Mechanism marked a turning point. This policy was designed to penalize imports with high carbon footprints, effectively raising the cost of dirty products entering the European market. For Canadian exporters, this was a golden opportunity. Their low-carbon nickel suddenly became a highly sought-after commodity, offering a clear competitive edge in Europe's lucrative and environmentally regulated markets. By capitalizing on this regulatory shift, Canada was able to transform its nickel industry. What was once a standard export became a premium product, valued not just for its quality, but for its green credentials. Automakers, especially those producing electric vehicles, faced mounting pressure to reduce the carbon footprint of their supply chains. Sourcing nickel from countries with higher emissions could mean costly penalties and reputational risks. In this new landscape, Canada positioned itself as the responsible, forward-thinking choice for companies committed to the green economy. Its environmental leadership became a selling point, attracting investment and forging new partnerships. Ultimately, Canada's environmental strategy wasn't just about protecting the planet. It became a powerful economic lever, reshaping its role in global trade and setting a new standard for sustainable industry. Canada sought new partners as U.S. tariffs made its market hostile. The pivot diversified Canada's customer base, reducing U.S. dependence. By 2027, $1.8 billion of nickel trade was redirected to new markets. South Korea and Europe with EV goals became key partners. South Korean imports of Canadian nickel surged by 20%. Germany secured green nickel for compliance with EU regulations. Canada built new trade bridges, showing agility and resource value. The dispute highlighted unintended consequences of protectionism. Canada emerged stronger, not captive to U.S. political whims. The nickel dispute affected U.S. national security and industry. Nickel is crucial for military hardware, from jet engines to armor plating. The U.S. relies on Canadian refining for high-purity nickel. Tariffs taxed U.S. raw materials, risking reliance on adversarial sources. Alternatives like Russia and Indonesia contradicted U.S. strategic goals. The policy threatened to empower rivals, creating security vulnerabilities. As consequences of tariffs grew, negotiation became necessary. A U.S. executive order allowed tariff exemptions for aligned partners. Canada suspended its EV sales mandate, signaling negotiation willingness. A $5 billion fund shielded Canadian industries from U.S. tariffs. Analysts saw a 60% chance of a deal, with various outcomes possible. A full exemption would restore the North American EV supply chain. Partial resolutions, or blended tariffs, remained possibilities. Cooperation was needed to de-escalate the conflict and repair alliances. The nickel showdown forced critical choices for the U.S. and Canada. U.S. faced a choice between protectionism and industrial reality. Tariffs risked damaging the auto industry and increasing China reliance. Pragmatism could restore the North American trading bloc. Canada had to leverage its strength for a favorable deal. A hybrid approach could secure U.S. access while diversifying markets. Permanent diversification was encouraged by the 2025 experience. Strategic resilience was key to navigating future trade disputes. The 2025 nickel dispute will impact North American manufacturing. The transition to a green economy is a geopolitical challenge. Trust and predictability in the North American battery belt were fractured. EV industry faced uncertainty and increased costs. Automakers needed resilient sourcing strategies for critical minerals. The dispute spurred Canadian investment in processing and new markets. Protectionist measures often backfire, empowering competitors. Cooperation was essential for a competitive global green economy. Thanks for watching. Subscribe the channel for more updates.